Let's talk about the magic of Fibonacci levels, and I will show you exactly how to use Fibonacci's in your trading. I'm a huge Fibonacci lover, and especially the extensions are my favorite tools. So first of all, in TradingView, you can grab the Fibonacci's here. It's also the shortcut Alt and F on Windows. And first of all, we need to set it up, so we will drag it onto our charts. It won't look the same in the beginning for you, but once you have dragged it onto the charts, you just click here on this settings symbol. And then the way I set it up is here you can screenshot it, you can pause it. I use extensions of the 161, 261, 227, and so on and so forth. I also use reverse because I make use of the Fibonacci extensions. And I will address your concerns in a moment, because I know there will be in the comments, because whenever I make a Fibonacci video, people say you're doing it wrongly, and this is absolutely not true. So for you, your 61 and your 38.2 may be reversed, and maybe on your charts currently is where your 38.2 is, you may have your 61.8, totally fair, but exploring first grade math, or probably second or third, when we look at Fibonacci's and percentage, we need to understand what are we looking at. 100 minus 38.2 is 61.8, obviously. And if we look at 100 minus 61.8, then we're gonna have, you guessed it, 38.2. So it doesn't matter in which way you're looking at Fibonacci's, whether you have your 61.8 here or your 38.2, it's gonna be the same. So relax, everybody, in the comments. And the way you use Fibonacci's is that you're looking for those drives, those initial trend drives. You're looking for wave 1, wave 2, and once wave 2 seems to be completed, once you can see that wave 2 seems to be turning around and starting wave 3, that is then where you are putting your Fibonacci's, and you're going to draw the Fibonacci's from the starting point of your trend wave to the end of the initial trend 1 wave, and then you are looking for Fibonacci retracements first, because we want to look for Fibonacci retracements to make sure that we are looking at a valid Fib. Only if you can see that your point 2 or your wave 2 is ending very precisely at 38, 50 or 61.8, then you have a valid Fibonacci. So you really want to make sure that the price action is really respecting one of those levels. You want to see a precise reaction, and then you are looking at a valid Fibonacci. So let's get rid of it and let's take a look at the charts. So we have here a few trending phases, a few trending markets, and where we're going to draw our Fibonacci's in the term of a downtrend. You can clearly see we have wave 1 here, wave 2 is here, and we want to make sure and to check how does this look. A, B, and C. And the most important thing, does wave C or point C line up with a Fibonacci level? And then what we're going to do is the Fibonacci extensions that we have turned on are giving us some target levels that we're going to use in our trading. And let's see how this looks. So we're going to grab our Fibonacci. We're going to put it from point A. Okay, this is no brain surgery, but I want to get it almost precise. Point B. You can see we have a very nice 50 retracement. You can see we have a closes around the level. So that shows us, okay, there is some type of confirmation. We can see later on, we even have another 61.8 retracement. So we have 2 confirmation levels here, which is great. And then you can see once the market breaks the 100 level and continues the downtrend because the market makes lower lows, then we are looking for Fibonacci targets. So you can see very common Fibonacci targets are the 138 and the 161. And you can see very nicely the market bounced into 138, retraced a little bit, then bounced to 161 and made a bigger retracement. So 138.2 is a little bit more of a conservative target because it's closer to the 100 or to potential entry points, and the 161 is a little bit further away. therefore gives you a higher reward to risk ratio, is also going to give you a little bit of a lower win rate because it's more of an aggressive target. You may sometimes get a 200 or even a 261 bonus round. However, those are very uncommon, and trading those, you really need to have obviously a very strong trend because they are much further away from 161 and from the 138 as well. So that is here the caveat. But in general, Fibonacci trading, you're usually using 138 or 161 as your targets. You could also then go to the next trend wave, because after the market made this trend wave or the sequence, we have another one, A, B, C. And you can also use your Fibonacci with this. So here's the point, the highest point of the trend wave. Here's the lowest point. And you can see we have perfect snaps here. We have a very nice close here on the 50 level. So great reaction here. And you can see the market dipped into very close to 127, didn't fully reach it, made retracement. Then you can see a nice reaction at the 138 and perfect reaction here at the 161. So obviously the further away the target, the longer your holding time will be, and also the lower your win rate, but your reward to risk ratio will be higher. And I've explored in previous videos this relationship between win rate, holding time, and reward to risk ratio. But this is generally how you use Fibonacci. So let's take a look at current situation. So the market obviously has rolled over, whereas previously, that's the wrong thing, whereas previously the market made lower lows, now the market made higher lows. And let's see, can we get in a Fibonacci here or maybe even here? Let's see what we have. And in the first example, you can see there are two issues with that. First of all, it's a very deep retracement. It gets very close to the previous low point. Those are generally not ideal to trade in the first